Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsb@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Pierre, our senior manager and mentor.
Thanks for having me over, Mark.
Thank you for joining us. And I think you're going to be mentoring me on some stuff right now because we are now in 2026 and we have the, OBB, which is the one big, beautiful bill. And how's it been going so far? Like, how has it played out so far?
So, great question. The OBB came on in 2025 and it had a lot of changes that were made permanent that were kind of up in the air for people. So now we're going in 2026, there's a lot of things that takes away some of our guessing of what's going to happen in the following years.
Because we've seen kind of how it played out, right? Because remember we talked about the IRS, how it's had to shift and it's made its changes, right?
Yeah. It's changes, meaning nobody worked there, then people worked there, then the government was shut down. So it's been pretty difficult for them. But the hardest part for a business owner is to know, should I plan for this year or should I plan for next year or should I wait or can I make this move now? And having the big, beautiful bill, whether you agree with all the policies or not, at least it gives us some guidance that goes a little longer than just short-term answers.
Okay, so let's talk about why 2026 is going to be such a critical year. Because now we have everything and everyone's going to be adjusting.
Yeah.
What's going on?
So one of the biggest things is the R&D credit has been restored and made permanent. And the R&D credit means if you do some research and activities to make a new item, even if it's an already existing item, you can get a credit from the government that's a direct reduction of your taxes.
Give me an example of that.
So, perfect example. See this pen right here? Everybody's seen this pen, but we make pens at our company, but I want to make a pen that this will never break. All right? Who hasn't broken one of these? You make one that wasn't break, so we spend a lot of time trying to figure out materials, product. We send some engineers. We try and test, and all those expenses can then be used to get us a research and development credit for doing that to make this new pen. And that credit is a direct reduction of your taxes. We love credits. Deductions are a reduction of your income. Credits are a reduction of your taxes. So that's why we love it. And they made that permanent, and there are a lot of specific rules, so please see your advisor.
So there was something like this before, but this locked it in for sure.
It was expiring, then they brought it back, then it was expiring, then they brought it back. So now they've locked it in.
Okay. Let's go into something about like tax and cash flow changes. So what's the most important changes that people should understand?
So when you talk about the cash flow changes, now that you have some of these permanent things that are going forward, like the Section 179 deduction is now made permanent as well. Bonus depreciation, that expired or is going to expire again in 2026. Those things are now made permanent, and now you can decide based on what cash you have, can I make the expenditure or not? You don't have to worry about if it isn't a real deduction coming up next year or not. So it's going to allow you to make those capital decisions better. So you need to know what kind of cash flow you're going to have so that you can make that decision. The law is now set until the next administration comes over, until some changes.
Yep.
But at least it's set on paper for the next couple of years so that you can then take the data from your cash flow and make those decisions.
So realistically, and we knew this, and this has happened before, new administration comes in, everyone kind of holds their breath for a while because they don't know the changes. The changes come and you don't know the ramifications. So you kind of have to take a year to see what happens.
Yeah.
Right? So now that everyone's seen it, now that we know kind of what the cash flow looks like from this year, we can start moving forward. So let's talk about the incentives, okay, for 2026. Which ones are starting to phase out?
So that's another part of the last big tax law changes. A lot of things were going to expire in 2026. Bonus depreciation was going to go away. Bonus depreciation.
We love bonus depreciation.
We love bonus depreciation, except the states don't. But bonus depreciation allowed you to take 100% deduction right off the bat. And then after a couple of years, they reduced it to 80%. Then 60%, then 40%, and then fully expired to no more bonus depreciation.
For example, like a piece of equipment, right? You buy that, you get 100%.
Yeah. And so Section 179 is very similar. Section 179 allows you to take a deduction for that piece of equipment up to certain purchase limitations. So if you bought more than $2 million worth of equipment, you couldn't get the Section 179. Bonus depreciation doesn't have a limit, but it also doesn't have a lot of the weight requirements or code requirements that Section 179 has. It has to be a 15-year life property or less. Then there are also limitations on if you buy a car. A car has luxury auto limits, which that rule was written when luxury autos cost more than $20,000. Now you can't buy a car for less than $20,000.
Even the non-luxury
Even the
ones.
non-luxury ones. So, but that's still the name of it. But with bonus depreciation, those rules kind of get thrown out. The problem with bonus depreciation is the states have decoupled from it. At least Illinois and Wisconsin, they say, we don't like that. All you can use is Section 179. But the fact that it's back allows people to make those decisions because it was going to expire.
Okay, so on a federal level, it's available, but not on the state.
Yeah.
Or at
So
least
we love it
here.
at the federal level because your highest tax bracket at the federal level would be 37.5%, plus in Illinois 4.95%, and Wisconsin could be 7%. So you're talking 42%. We love that.
Big
today.
chunk.
Whereas the state in Illinois is only 4.5%. We might give it back for that to take the big deduction at the federal level. But the point is, again, like all this message here, it's now made more permanent than what we had at the beginning of the year where we didn't know what was going to happen in 2026.
So we got 3 years of this, then we wait and see. Yeah. Okay. So speaking of waiting and seeing, what do we want to do with this? What are the pros and cons of waiting and seeing?
So congratulations, you wait and saw. Now those bonus depreciation in Section 179 is back. And the income limitation for purchases is much higher in 2026. But some things you have to watch out about is the credit for solar power. Mm-hmm. That was in there for a long time. The Obama administration put a lot of those incentives in there. And this administration is limiting those. But they still allow them. So if you're going to put solar power on your roof, which you can get a great credit for that, mm-hmm. And this is good for manufacturers, people that use a lot of power. Not so much. We use a lot of brain power here at our company, but we really only use adding machines and computers and lights. Yeah. But if you're running laser machines and CNC machines and you're using a lot of power, this is a great incentive for you. And as long as you have the plan in place by July 4th of 2026, mm-hmm. you can still take advantage of it. It does have to be completed a little quicker. So in one of those cases, hey, we still waited, we still get Section 179, but it's going to go away. And those projects like that, which can be very lucrative for a manufacturer, if you don't take it now, it might still be worth it without the credits, but why not try to get it with the credit?
So, I mean, in reality, that we know what it is, it's available, you should take it while it's there.
Yeah.
Right? Like it's on the table.
It's on the table right now, and it's going away. So even for individuals, if you wanted to put it on your house, that incentive is going away too. But it's not as big a gain or a win for a manufacturer really uses a lot of electricity. You're spending $20,000, $30,000 a month on electricity. This incentive's a little more power. If you are spending $20,000 electricity at your house, gosh, we got to come over and see what you're doing because that's pretty cool.
They're probably growing something.
Yeah, yeah, which would be a business in theory.
Which would be a right. No.
Yeah.
No, we're not. Yeah. So let's get into the opportunities, right? What opportunities or what areas can we see the biggest growth potential investment?
So, yeah, there's a lot of things that this new bill encourages investing for long term in the growth of your business. You know, that strategy, because now you can take that opportunity and then certain areas like Northern Illinois has economic opportunity areas where if you put the investment in your business and get your Section 179, get your bonus depreciation, now you're going for the long term and you're getting a little more benefit that you might not have done if you didn't know if you could get the deduction for it. And all you were getting was that opportunity, economic opportunity credit in the locale that you were in.
Are there any other areas in the bill that are really going to, I don't know, kind of push the needle? Because a lot of times it's just like, hey, here's a little nudge this way, a little nudge that way. Do you feel like there's anything in here that you're like, this is Like, I point all my clients to this.
Well, certainly those are the two biggest ones that I talked about, the energy credit, because it's going to go away and it's really advantageous to you. But when you talk about, well, there's a lot of things where you get no tax on overtime and no tax on tips.
That's gotten tons of press.
Yeah.
And everyone hears about that.
Yes. But so that's a good thing for you. You can use that to your advantage as a business owner to promote opportunity. But it's not as big a bang for the buck for each individual person because it's limited to your income. So if you and your spouse both work, if you make $150,000, you get limited on that overtime. And it is a $12,000 credit. Your business, they don't give you an advance on it. You have to wait till you get your tax return to get it. And it's only on the portion of the hours that are time and a half.
Yes.
Same with tips. Let's be honest, a lot of people don't report tips. So they've not
That
been
is
paying tax on it
I
either.
have been confused about that portion the whole time.
So a lot of employees will say, I shouldn't be taxed on my tips. Okay, you haven't been reporting your tips. So it's a little catch-22.
Yep.
So great, beautiful bill notification, hey, no more tax on tips. Okay, again, that's only on certain tips in certain industries. You can't do it if
we're reporting it to begin with.
Yeah, we're reporting it. So if you weren't reporting it, you're not getting an advantage.
You were super not getting taxed to begin with.
You're already not getting taxed, yeah. So, okay.
I mean, people really don't like being taxed, Pierre.
No,
we already know that.
Yeah.
Okay, so that's the biggest changes for employers and employees as far as their benefits.
Yes.
What are the big takeaways then from what we've talked about? Like, if you had to kind of sum it up and say, this is our thoughts on the big, beautiful bill and how it's affecting people and what to do in 2026.
So a lot of the big things is now that you have the framework of what you can do, now's the time to make those decisions. See what you have out there. Make practical decisions of, it's not, a lot of these changes are not, wow, this is new. It's now locked in. A lot of this stuff was going to go away. Now it's back. And so you can make that decision, hey, let's invest in that CNC machine. Let's invest in these trucks because we will get the deduction for it and we see a clear path forward.
Okay, so essentially what I'm hearing is now, beginning of the year, we know the path. Let's make the decisions and let's get going.
Yep. Let's make it happen. Yeah.
So it sounds like it's a doing year.
It is.
Last year was a sit and think.
Pivotal doing. Last year we didn't know. You had the tariffs coming out. Mm-hmm. Nobody knew what effect that was going to have on people. Mm-hmm. And then they backed off it and then they came back. And we have a lot of manufacturers that get stuff from overseas or sell product from overseas.
Yeah.
Stuff wasn't coming because they didn't want to pay the tariff on it. Mm-hmm. And how's it going to affect my employees? How am I going to pass that through? So we had clients that had products from China that, let's say they sell it for $100 and they bought it for $20 in the past. And good markup, but you have to process it, finish it, and put it out there. All of a sudden the tariff comes through and that $20 product now cost us $80. Mm-hmm. That whole margin just disappeared. Mm-hmm. And so now you can't go back and say, hey, I was selling this for $100 last year. Let me sell it to you for $200 to make up that difference, or $280. So that was tough for people. But then they backed off on those 100% tariffs, and it went down. It went higher, but it went a little lower. But that caused a lot of confusion for people. So now what is set, and you can make some decisions based on at least 2026.
You were going to tell me right now, Pierre, what is something I should be doing this year besides putting on solar panels on my business?
Yeah.
My business is my house, so it really doesn't.
Definitely.
It's not the same.
And I do say this all the time, everybody. You want to be taking advantage of your 401k plans and your retirement plans. And there are cash balance plans that you can take money out of your business pocket and put it into one of your other pockets, just as a deduction for the company and a way to build your future.
Perfect. Thanks, Pierre.
Okay. Thank you.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.